Hi, and welcome to Insight Private Wealth's Investment Insights. I'm Sam Stillone, and I'm here today again with Dr. Steve Garth for an inside look into globalisation. Steve, a lot of companies nowadays have earnings not only here in Australia, but in the US, Europe, and other parts of the world. They're also reporting in, say, US dollars or in other regions, and they could actually even be listed on multiple stock exchanges. The markets seem to be moving together during different times. Is it still important to have a diversified portfolio?
Yeah, that's a great question, Sam. You mentioned some of the Australian companies. Of course, BHP and Rio have got operations all over the world. CSL gets most of its revenues from the US. Afterpay gets most of its revenues out of the US. And of course, if I look at other companies like Vodafone or Apple or Google, of course, their operations are all around the world. And it's certainly true that, particularly I think after the GFC or during the GFC, there's an old saying that the only thing that went up during the GFC was the correlation between markets. So there is this perception that all the markets move as one. But Sam, why don't we have a look at a couple of examples just recently on why diversification is still important. So my first example is looking at different countries. So in the chart in front of you now, I've got Australia, China, Europe, and the USA, now all in Australian dollars. These are MSCI indices. And what you can see is that while Australia, Europe, and the USA have all returned about 30% for the previous 12 months from September the 30th of this year, which is, awesome returns, China, on the other hand, is down by 8% for the year. And in fact, China's down 15% for the quarter. So if you were only invested in China, that's been a really tough quarter and a really tough year. China's put some constraints around property development, and that's led to a drop in the iron ore price. And of course, if the iron ore price drops, it really affects some of our largest companies in Australia, BHP, Rio, Fortescue. And you can see in this chart the performance over the last quarter of the materials sector. So while the Australian market returned 1.7%, the materials sector is down by nearly 10%. It's down by 9.9% in the quarter. But on the other hand, gas, coal, oil, they're all up at year-long highs. And so the energy sector is up by about 10%. So once again, this speaks to the power of diversification, both within a country and, outside of a country. So it's important to be diversified across stocks, across countries, and across sectors.
Yeah, look, and we try and construct client portfolios using diversification as the cornerstone of our investment approach. Ultimately, we want to have low-cost investment options for clients which are going to meet their needs, and we try and avoid listening to all the noise of the press and focus on those longer-term strategies. For those of you at home, Insight Private Wealth is not owned or controlled by banks or superannuation funds or stockbroking firms or anything like that. We do provide absolutely independent investment advice. So if you do require investment advice or financial planning or retirement planning advice that is in your best interest, please reach out to us. We'd be glad to help.